Good afternoon and welcome to the Boring Millionaire podcast. Today's Thursday, July 31st, and in this video, I'm going to go over what 5 stocks I've been buying this week, why I'm buying them, and how you could buy them with any budget. So the first stock I'm buying this week is Coca-Cola. Coca-Cola is a household name, and as I always like to say, I love investing in the companies that mold the world that we live in. Coca-Cola certainly does that, and with that said, they're presenting a slight discount off their all-time high. They're kind of trading in a sideways range, but within that sideways range, we did see them land at their one-year average. So being that it's landed at its one-year average, presenting a slight discount, I do think now is the time to be buying Coca-Cola. Their earnings have already set in as well. They were basically in line with what the street expected. So now is a good time to buy the stock, hang on to it, collect that dividend while we wait for the stock to rebound and continue moving higher. Now, what's a dividend? A dividend is very important because a dividend is money that the company pays you just for owning the shares. So every 3 months, Coca-Cola will pay you a little bit of money just for having those shares in your portfolio. So dividends are a fantastic way to make money in the stock market. They basically create a silent background income that you generate for ownership of the shares. So you buy Coca-Cola, you have the anticipation of it appreciating, which means getting higher in value, and then which case you're getting paid in the background for the dividend income just for ownership of the shares. So a lot of stocks pay a dividend that creates that income while you wait for your stocks to appreciate over the long term. So another stock that pays a great dividend is McDonald's. Now, McDonald's, another household name that shapes the world that we live in, they are presenting about an 8% discount off their all-time highs, and with that, they're also trading at their one-year average. I love to buy stocks when they're at the one-year average. I would also say the same about the 3-month average, and not as excited about the 6-month average, but the 6-month is important as well. So McDonald's sitting right at its one-year average on an 8% discount, to me, creates a great buy for the company. I want to be involved in stocks like that, and that discount and that lineup is what's telling me now is the time to buy it. I would also like to say McDonald's also pays a dividend. Their dividend is 2.37%. So again, while you're waiting for this stock to appreciate and move up in value, you're still getting paid an income in the background. Now, the third stock I'm buying this week is Netflix. We are mostly all aware of what Netflix is. It is the leader in streaming services, and they too had a great earnings report. They kind of calmed down after those earnings have settled. It's trading between its 3-month and its 6-month average. It's finding a balance there. And one thing I like about the Netflix charts is that where it's sitting right now, despite it looking like a discount and a low, it's actually meeting the same price of its old highs. So one thing I always like to preach when looking for a good discount is the old highs become the new lows. So that's exactly what we're seeing with Netflix. I want to be invested in that kind of company, being that it molds the way we live in our day-to-day lives. So right there, I'm pulling the trigger on Netflix in hopes that while it's in this upward trend, we will move forward after this discount settles down, and we'll see all-time highs new on this stock in a week or two. The fourth stock I'm picking this week is Take-Two Interactive. So Take-Two Interactive is the parent company of Rockstar, and Rockstar is the game development company that makes GTA. So GTA 6, Grand Theft Auto 6, has a high anticipation surrounding it for its release. It is expected to be released in May of 2026. But when it is released, I do think it is going to change the world as far as how video games are played, perceived, the graphics among those video games, as well as I really think it's going to be groundbreaking in the metaverse and simulated world space. People already have a huge investment in the GTA Online that's presented on GTA 5, and I just think all things considered, it's a great stock. I want to buy the stock now ahead of that release. And granted, yeah, we're a year ahead of time, but I do think the anticipation will continue to rise. I do think people will only continue to be more excited about this game as well as the company that's presenting it. And with all things considered, I want to be involved before that game gets released. So Take-Two Interactive, trading at its 6-month average, is also presenting a great opportunity sitting at that average. So I'm buying it at these levels. So the fifth stock I'm picking this week is Chewy. Chewy is presenting a 25% discount off its recent highs. And then again, with that discount, it's landing at its one-year average. Chewy does have earnings next week. I have an anticipation that these earnings will be well. They'll come out great. Their outlook will be great. So outlook is important because it's not just about how well the company is doing right this second or the quarter behind us. It's important for that company to issue good guidance because they're basically saying, over the next 3 months, 6 months, 1 year, we anticipate to do these things and do this well. And then that gives investors really kind of some comfort in what they're investing in. Because you're not investing in the past of the company, you're investing in the future of the company. So with all that said, Chewy's earnings come out next week. The stock chart is telling me that it's a great time to be buying this company. And for those reasons, I'm putting my money into Chewy. So now what I want to get into is how can you buy these 5 companies this week on any budget? One way I like to look at it is, let's say you take $50. You could take that $50, break it into 5 $10 increments, and then take those $10 increments and put it into each of those 5 companies. Now, you could do that with any mathematic. You could take $100 a week and do $20 increments. You could do $25 a week and do $5 increments. Whatever your budget allows you to do, you can use that budget to invest in the stock market because the way I see it, it's about money getting invested and not necessarily how many shares you have. So in those examples, let's use the $50 example. You take that $50 and you put $10 into Netflix. Netflix is basically a $1,200 stock. So that $10 is going to get you about 0.007 worth of a share, which looking at that, 0.007, that's not exciting. I want to own Netflix. I want to be involved in the stock market. But in that example, you are owning Netflix and you are invested in the stock market. It's not about how much money you're really putting into the stock market. It's about the fact that you're actually putting the money into the stock market and investing in these companies. And then through a long course of time, as you stay disciplined to these investment strategies, those positions will grow bigger and bigger with more money invested in these companies. And then the snowball just continues to get bigger over time. So that's one of my favorite strategies for building a strong portfolio, taking whatever's feasible for you every week and investing into separate companies throughout the stock market as they present discounts. So with all that said, please follow me on Facebook, Instagram, and Threads. All episodes are available on Spotify, YouTube, and Apple Podcasts. And I'm always happy to answer any questions you may have about the stock market. My mission is to not only make sure you're making money in the stock market, but that you're doing it confidently. So thank you for tuning in, and I'll see you next week.